I messed up big time. In today's video, I'll walk you through exactly what happened, the mistake that I made, but more importantly, the lessons that I learned, so hopefully you don't make the same mistake that I did and save yourself some money. Of course, we're gonna examine my portfolio, buy some stocks, and see how it's performing. My name's Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners, because let's face it, there's nothing that gets you ready for that first day of your investing journey, and I do it by sharing my journey with all the ups and downs along the way. So follow me on my journey, and hopefully we'll get you started on yours. All right, guys, I haven't shared a video with you in a little while, but this one was definitely worth it. It's supposed to be a comedy because it stars Tom Hanks. It's called Auto, and it's on Netflix. However, I wouldn't necessarily consider it to be a comedy. I didn't necessarily find it. There is some humor built into it. The basis of the movie is Tom Hanks plays a widower who is struggling with the loss of his wife. So go check that movie out on Netflix. It's worth a watch. All right, so the account is sitting at $159,925. It consists of my cash account, my TFSA, my RRSP, and the kids' RESP. The star of the show is my TFSA. You're watching me build this from zero to maxing this out. I started this at the age of 51, and I'm trying to see what I can do before I retire. All right, so the cash account sits at $20,000.93. Now, over the past videos, you've seen this fluctuate a little bit. That's because I was using it kind of like my primary bank account. That's no longer the case. This is our emergency fund, and it will kind of remain this way from now on. If you watched some past videos, you'll know that I said we were switching from the big bank, in this case that's Toronto Dominion, over to another bank, and we've actually started stage 2 of that. There's going to be 3 stages. All right, the kids' RESP is sitting at $75,345. It's a robo account, so by the time they are ready for school right now, they'll have $541,000 split between the 2 kids. Now, because it's a robo account, of course, we do pay a small fee, but because we're premium customers with Wealthsimple, we actually get a bit of a discount on that at 0.4% rather than 0.5%. The net deposit is $61,019. Returns on the account, $14,326 with a rate of return of 23.48%. Now, since the last video, we've purchased ZEA, ZFL, and QCN. And that's from $200 bi-weekly deposits that we put in there. Of course, when we do that every 2 weeks, we also get some government grants which come through at the end of the month. So this account is slowly growing over time, and hopefully the kids will be able to take advantage of this money when they actually graduate. But if you actually want to learn more about RESPs, because they are a very versatile account, you should check this video out right here. All right, jumping into my RRSP, it's sitting at $19,209. Now, the market's been a bit volatile since the election, so we're down $25 on the day. Over the last week, we're down $184, which is actually kind of interesting because since the election, the entire account has actually blown right up, and you're gonna see a video series pop up on the screen that documents the entire portfolio because I have other accounts. But when the election happened, boy, things really changed. So you're gonna wanna stick around to the end of the month to see my monthly portfolio update to show how much it actually grew. So I'm a little surprised that the RRSP is down, but that's what markets do, up and down. And as we go along here, you're going to see that there's actually still growth in the account. So for the last month, we're up $320. And over the last 3 months, we're up $1,423. And over the last year, we're up $3,849. And all-time returns on this account, we're up $4,009. Something to keep in mind here is that I started this account last April of 2023. So I'm learning. I don't think I'm necessarily a total beginner. I'm definitely learning in my knowledge. But since I started investing, this account has grown $4,000. And there really hasn't been very much money put in this account whatsoever. The reason that I show this account is because it's part of my Wealthsimple account, and when I introduce the account and say it's at $159,000, I want to show you where those figures are coming from. Remember, the star of this show is actually me building that TFSA up. We are going to try and max that account out as fast as we possibly can. All right, the RRSP has 1 cent in it. Like I said, there's no money being put into it. Now, I did make one big change in this account. We're going to talk about that in just a second. And like I said, when I introduced in the video, I said I made a big mistake. So stay tuned because it's coming up right away. All right, since the last video that I posted, we had VRE payout 48 cents, HYLD 11.91. DRIP is set up so it's automatically reinvested. And we also had EAT payout $8.90, and we had Plaza REIT payout 24 cents. Again, both those on DRIP, so reinvested right back into things. All right, overall portfolio, AVDV, AVUV, CNR, EAT, HYLD, HYLDU, so I hold them both, Plaza REIT, Tesla, VU, VRE, XEI. If you have been following me for a while, you're going to know now that we went through that list that there is a stock that's missing. That's right, it's QQQY. Keep watching to the end so you can see exactly what went wrong. All right, into the TFSA, it's at $44,658. Over the last day, it's down $133. Again, the markets are pretty volatile. Over the week, we're down $518, and over the last month, we're down $148. Over the last 3 months, we're up $2,431, and over the last year, we're up $6,129, and all-time returns were up $6,638. That is 17%. Even I am astonished. I have to admit, after 18 months, I'm actually pretty ecstatic about what I've been able to accomplish as a complete beginner. Now, something to note is I don't have a financial advisor. It may be something you may want to consider if you want to expand your portfolio, or maybe you're really young, or whatever the case may be. For me, I wanted to give this a go on my own and see how I could do. I'm not ruling out the fact that I might hire a financial advisor at some point, but for now, this is how I'm doing things. You'll have to make those decisions on your own, and hopefully you're learning something valuable from my journey. So we currently have $2.38 in the account, but of course we're going to drop in that $1,000 that we normally drop in. Stock lending's on, we've earned $3.02. BAM, CNR, Plaza REIT, all on loan. The next payout will be December 13th. Looking over the stocks that I have in the portfolio, there's one in particular here that is actually driving me nuts. And I'm not too sure what I'm going to do with it, and that's TELUS. Now, this is another dividend stock. When I bought it, number one, I own it because we actually do business with TELUS. Number two is they are an established company in Canada, and they're not small, right? There's the three big ones. You've got TELUS, Rogers, Bell. But for me, I figured because we are doing business with them, we would invest in them. Now, they do pay a dividend. Unfortunately, this stock has not been performing well, as you can see on the screen here. It's not a big allocation in my asset allocation. However, it's down $132, and interest rates have been falling. So I expected as interest rates fell that maybe there'd be a turnaround. Now, it could take some time for this stock to turn around, so we'll have to hang in there and see where things go. But it's definitely one that I'll be watching closely and probably doing some more in-depth analysis, at least from my perspective as a beginner. All right, so we're gonna deposit that $1,000 in the account. Again, well, simple, very easy to use, can be used on your phone. I just did a video or tutorial on it, so if you don't know how to use it, check it out. And I do have a referral link in the video description below that will help you get started, save you a bit of money, put some money in your account to get you going. All right, so we have the money deposited, and now we're going to use the tool that I use to help me decide what to buy based on my asset allocation, which is passive. So we're going to jump over to passive, and it's going to give us a hand. All right, so once we're signed into passive, we have to update itself, and it will recognize that deposit. So our asset allocation dropped down to 93%. We have $1,002, but as soon as we make our buys, that will go back up. We have $45,672 in the account. Passive's taken that money and figured out what to buy. We're going to buy 1 share of QQC. We're going to buy 1 share of RioCan. We're going to buy 3 shares of VFV, that's the S&P 500. We're going to buy 1 share of VRE. We're going to buy 6 shares of XEC. This is so that I'm diversified. 7 shares of XEF. And finally, 1 share of XIC, which, right, so we had a little bit money left over. So I'm going to go ahead, I'm going to buy 1 share of XEI. That's our high yield dividend fund that produces monthly income. All right, we're looking at passive with respect specifically to my TFSA to look at some of the metrics. Now, I have had some issues with Passive if you've been following me for a little while, and just before I started shooting this video, I actually got an email from Passive, and I'm working with them now to work out the bugs of the reporting that's been happening since the past. So it's now registering the money that comes in the account, but of course the metrics are all messed up and I can't manually add it. So I've been asking Passive if there's a way to rectify this. Now, I do think that Passive does have some good tools within it that help you with your portfolio, but if this continues to be a trend, I might have to look at using other tools in order to look at all the metrics, because some of them are incorrect, and I'll show you exactly what I'm talking about. So we can see here in the contributions that there was a big gap. That's when it wasn't reporting any of those deposits that I made. So it says that the net deposits in the account were $23,713, but of course that's not correct. And I kept a spreadsheet, so we'll go through that spreadsheet and you'll see what I mean. So I've been keeping track of the deposits. So in 2023, we had $16,050 worth of deposits. And then in 2024, I've done the same thing. I've gone through each of the deposits month by month to keep up with it. And by the end of 2024, we had a total of $22,737. Here is the dividend history. Now, I know this part is actually correct. It's showing a nice increase. You can see this one with the big blue one. Some of the ETFs that I'm buying only pay out every 6 months. So in December, we're going to see another big payout. Our average monthly dividend is $46. Now let's use Blossom Social, which actually has a dividend tracker. We can see a steady increase. Now these numbers are all correct. It takes the data from your brokerage, links it, and it gives you the ability to look at this individually. So we can see each month a steady increase. And Passive said we're roughly making about $46 a month. You can see on average that's where we sit. Here's the big month that paid out $113 in dividends. And of course, December will be the same. So leading up to last month, we made $111 in dividends. We can go down and check by month what's happening and where all the dividends came from. So we can see here VRE, REI, HYLD, and it breaks it down one by one. All right, so here it's saying, Passive saying we have a total of $908, and we can see here that that's pretty accurate based on what Blossom's saying, $907.98. We can see that every hour we're making 26 cents, and every day we make $6.35. And it's saying that on the month we make $193. This program actually has another aspect to it that predicts what will be paid out. And so here's a graph of what it predicts that will be paid out, and here is what it looks like for how much has actually been paid out thus far. So now we have $45,583 in the entire account. Now recently, I got an email from Wealthsimple telling me that they were going to actually let me open up a spousal RRSP. And if you don't know what a spousal RRSP is, it's a great way for you to defer your tax but give money to your spouse. So in my case, I have a pension, but my wife doesn't. So I make the contribution into this account, and then she'll draw that money down later when we retire. Now, in the meantime, I need to figure out what I was going to do with this account. So what we're going to do is I'm actually going to run, we'll do a little test over time. And I'll cover it on bi-weekly updates like I do on these videos with my TFSA. And what we're going to do is we're going to actually just do strictly covered calls. I want to see what kind of monthly income we can generate. Now keep in mind, the money's going to be fairly small because we're trying to max that TFSA out. But in the meantime, it's a tax benefit for me to put a bit of money into that account. For instance, I told you that I earn interest in Wealthsimple. Well, the new bank that we use, which is EQ Bank, that's taxable income, the interest that comes in. So we're going to offset that because it's not taxed by putting it into this account. And I'm also going to make $5 a day into this account. I want to show you guys, especially if you're new, if you've been around a while, this probably won't apply to you. But if you're brand new and you found my channel, this is something that you can do. This is, especially if you're really young. Let's say you don't know how much money you're going to make. Start by putting $5 in a day and invest that money over time. And we're going to see what we can do with this account. Now, I've already set the account up, so let's go over it and we'll see what's in it and where we're going. All right, so the account has $252.99 so far. Over the day, it's down 50 cents. Over the last week, it's down $1.73. There's $32.57 in cash. You can see $10 not available because that's actually being deposited. It takes about 3 days to move from one institution to another. For now, we're just gonna go with Canadian funds, and it's all covered calls. So we got HYLD and we have EQCL. Now, I did go into passive and set up an asset allocation, and from that, I'm going to use this to help me figure out what to buy. So going back, in November of 2023 was the first time that I bought QQQY. I had heard about this fund and thought this would be a fantastic buy as a covered call. Thinking long term, because I'm in retirement mode looking down the road, I thought having a covered call like this would be really good to generate monthly income, because that's the purpose of covered calls. Unfortunately, that was a big mistake. All right, now let's talk about where I went wrong. In my thesis, a covered call strategy, I was hoping that as I was getting dividends paid out, that those dividends would help me grow my portfolio. But one major important factor that I overlooked is the net asset value, or NAV. The NAV is just as important. All right, let's explore this NAV idea a little bit further so we can have a better understanding. The idea with investing is you want to make smart decisions. You don't want to be driven by just a simple return. And in this case, I got suckered into a simple return. All that money coming into your account, when I say that I earned X amount of dividends in a month, boy, doesn't that get you fired up? Don't you think like, oh wow, I'm being paid? Well, the reality is that if you're being paid a high dividend, but your NAV isn't performing well, you're really doing yourself a disservice. So looking at this chart, it shows the year to date. So this is approximately the same period of time that I've owned this position. And you can see it looks like a staircase. In other words, it's actually going down. This is the principle. So let's say I invested $100 and I'm getting a dividend return on top of that. Each time I get a dividend return, the net asset value, as you can see by these steps, this is directly from Yahoo Finance, that principal amount is slowly decreasing. So even though it's still paying out a dividend and I'm generating this cash, it's doing nothing for me. If I was retired, perhaps I wouldn't want to worry about this anymore because maybe I don't care about, the actual asset value. I just want money coming in to pay the bills. But right now my wife and I are still working, so that makes 0 sense for our situation. I want to see all the net asset values either staying the same or growing. So here we can see that the cost of the stock was $59.55 when it first started, and it's now $32.76. Again, slowly decreasing over time. Definitely not a good thing. All right, now let's compare this against another stock that I hold so I can demonstrate to you my thesis. So we're going to compare it against HYLD.U, which is the US version of HYLD, a covered call strategy. The red line on the screen represents HYLD, while the blue line represents QQQY. So we can see the net asset value has been steadily decreasing with QQQY, but with HYLD, the net asset value has slowly been increasing. Now the payout, and this is the key here, is the dividend that's paid out by HYLD is definitely not as high as the one that was paid out by QQQY. But why on earth would I just throw money away? I want to see growth in the net asset value. And at least with HYLD, there is some of that. Now, something else I want to throw in so everybody kind of understands. When we started investing, we did have some accounts, and those are in those monthly updates where you can see the money that we had transferred in and I start to DIY invest with. We started investing in the TFSA because we wanted to be able to have access to that money if need be. It's also growing tax-free, which is also a nice thing. By having some covered call strategy in place, I wanted to see whether or not we could generate monthly income, because this seems to be a big subject. They call that passive income. Could we generate enough money to live off of even today? So while the net asset value was decreasing, yes, I was gaining a lot of dividends, and you can see them here on this chart that I put together. In the first year, of course, it was right at the end of the year in December, my first dividend came in, I made $40. That sounds really great. And then we can see that throughout 2024, it continued to pay quite steadily on a regular basis, 36, 39, so on and so forth, to the end of the year where I was making $55 a month. In total, I made right around $600 in total, but the net asset value was dropping faster than the dividends could sustain that. So in reality, when I ended up selling, I ended up losing money. And one of Warren Buffett's big rules is don't lose any money. Now, the good news here is that I didn't allocate a large portion, as you can see by the money that was retained. I kept it under $1,000. It was a bit of an experiment for me to see if the strategy would actually work. And I think that I've proven that it generally does not. How can a fund pay out more than 50% on each dividend? I mean, Defiance does offer some pretty big payouts. And if they're not recouping that, you'll see that net asset value continue to fall. And with 9 years left in my investing, I don't want to see that. So the decision was to sell it. So if you're looking at some, funds like this, hopefully you'll take something away from the lesson that I learned. So now the big question is, what did I do? Well, we're gonna go through that right now. So we can see that I sold that stock on November the 13th. So I held it for just over 1 year. I only had 20 shares. And in total, I got $682 in US funds back. What did I do with them? Well, I reinvested those into HYLDU, based on the chart that I showed you and experience that I have. I got drawn in by the allure of a big dividend. That's that monthly income coming in. I saw dollar signs and thought this was the right way to go. And of course, in the meantime, all that was happening, it was just chipping away at the principal amount. All right, now that you know about the mistakes that I've made, and I've shown you how to set up a spousal RRSP using covered calls, one of the big strategies that's really great to grow your portfolio is to be in US funds. And in order to do that, you need to be able to convert your funds from Canadian to US and save money while you're doing it. And in order to learn about that, you should watch this video right here.